Good morning, folks. It is Wednesday, September 3rd, 2014. Thanks for joining me. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Several key news items overnight. Ukraine presidential office says the Ukraine-Russia presidents agreed to a permanent ceasefire in eastern Ukraine, to which Putin's spokesman says Putin did not agree to a ceasefire as Russia is not a party to a conflict. Later, the Ukrainian president's office withdrew the term permanent out of that statement. And then the rebels agreed to this ceasefire if Ukrainian forces pull back. So that's good news, pushing the markets up. August PMI service misses. The Eurozone gets 53.5, Germany 54.9, France 50.3, Italy 49.8, and Sweden 54.2. Those all missed their targets. PMI services beats in Europe. Spain comes in at 58.1 versus 55.1, and the UK at 60.5 versus 58.5. The UK continues to have the strongest recovery in the European area. ECB's Ly Cannon says the ECB is ready for more measures, will not risk price stability. Die Zeit, which is a German newspaper, says the German government's preparing plans to boost the economy, avert possible slowdown. The German economy has been hurt a little bit by the sanctions on Russia, big business between those two countries. China, August HSBC PMI services rose to 54.1 versus the expected 50.0. Strong boost there. And then the Japanese PM, Abe, or Abe, I'm not sure how it's said, replaces entire cabinet in an attempt to shake things up to improve the economy. The economy is the central focus of the Japanese government and policy currently. JP Morgan sees ECB buying up 53 billion of asset-backed bonds in the near future. On what is coming out for today's session, at 8:45 Central, just 15 minutes after the open, we have ISM New York, or New York. There's no expectation. At 9 Central, U.S. factory order is expected at 10.9%. At the same time, at 9 Central, Canadian rate decisions coming out, expecting 1%. At 1 o'clock Central, Fed's Beige Book. At 10:30 this morning for supply events, 10:30 Central, we have 4-week bills for 40 billion, and then we also have 11 at 10 o'clock also, or 11 o'clock actually. We have cash management bills for 15 billion. Let's take a look at what the market has done over the last several days since I did not do a trader bite yesterday. Kids had their first day of school. I wanted to make sure I dropped them off. Okay, so overall, between Friday and yesterday, essentially yesterday took back what Friday did. But not entirely. Yesterday essentially confirmed value from Friday and tested the entire range and ended up back at the point of control from Friday. So yesterday was more of what we would expect to have in an auction that completes itself. This is something that's been missing lately from the overall market. But overall, we have a lot of volume that took place at 2,000 quarter. Yesterday essentially opened out of range. It came back in, tested the point of control, bounced back up, and then fell back in. Put in several weak lows. I'd mentioned that on Twitter several times that the low just does not look like it's going to hold. And I was targeting 97 right down here. If you look at 97, from Thursday, several bounces off this 97 here, and then on Friday we pulled back to the 97 before the closing swing as well. So it left at LVN in addition to a low volume node on the composite. Even if I pull back the composite here, you'll notice that 97, well, until yesterday, 97 had very little volume in it, so that's why I was paying attention to that level. See this right here, 97. So it went down to 97, bounced back up to almost the IB, and then fell back through, went right down to within a couple ticks of the prior day's low. Prior day's low is 92.25, and it got to 92.75, and then it found buyers. Pretty good delta back to zero. Notice the delta went from negative 19,500 back to zero on the close. This action confirms that these that value is being accepted, and then the comment that I left yesterday afternoon on my Twitter feed, was that we were expecting it to drift up overnight, and that's what it did. It went to 2011. Okay, let's run through the action, as most of you have asked me to continue to walk through the auction. Again, whatever you're trading, it doesn't matter what it is an auction, and it's based on what came before it. And so it's important for you to understand the auction. Open auction, out of range type, no higher time frame and control here. We have day traders zipping back and forth. A clear opening swing at from 2002 75 to 2004 25, and then it broke it to the downside. Here it is. Pushes down into the prior day's point of control, prior day's close, a small bounce, comes back to the prior day's range high, mid, VWAP, and then has a continuation trade. Almost, it looked like a continuation trade. Missed by 3 ticks, higher low, so we're expecting a higher high here, some strength. Again, other than this move here, it's all pretty much short-term traders in here. So no higher high. We get 2002 versus 2002 off of the 99.50. So we have a higher low, fails to make a higher high, an even higher low. The expectation is it would get back into the opening swing and continue to drift higher into our next target, which was 2005. 2005 is the next measured move target, but instead it goes to 98.75 and puts in a double bottom. 98.75 was the low during the Labor Day session. So what we have here at this point is a very weak low. The expectation is that will likely break. The high is not so great, but still the low looks pretty bad, and it's not able to get out and hold above the prior day's range. Nice confirmation of the opening swing here about 45 minutes into the session at 2,275. So we've taken the opening swing, confirmed it right here. Very, very choppy, very difficult trade. Mixed signals. I don't care if you trade price action or whatever. It was definitely giving two-way signals, which is which is further evidence that short-term traders are in control. Finally breaks the weak low, and there's the 1997s right here, 1996.75. Gets to it. That was my initial target down. Nice bounce. Misses the IB low by 1 tick. Expecting a continuation move. This is an impulsive move here, expecting a continuation move, and we get that. There it is. And then now we expect a corrective move, an ABC type move. The low is not so great, 92.75, double bounce. Not liking that low very much, but the market was definitely strong into the close, and it closed right into the prior day's close. So we closed at 99.75 on Friday, closed at 99.75 yesterday, right against the point of control. The market's basically saying we like these levels. They'll do just fine. On the open yesterday, 99.25, and then it pushed up. Let's get the overnight session to continue looking at the story. Okay, so here's the ceasefire information that came through. Strong volume, strong delta. I think HSBC was right here from China, but the Ukraine news was very strong, pushing us out of the prior day's range and holding a weak low at 2005 with an LVN there. On the open, bulls will not want this thing back below 2005 and into the prior day's range. They would want it to continue to be bullish. The next level up I have is 2013. Now that 2005 has been taken, but we'll see what happens on the open. We'll see what happens on the open, how that's treated. I think the inventory is long, so the expectation on the open is a little bit of a responsive selling. Again, we're opening out of range, so pretty much for time now, our opens out of range have been open auction out of range. So not expecting, not a very high expectation of an open drive or anything like that, although when we open out of range in new territory, the probability of an open drive is much, much higher. However, lately we've been doing an open auction out of range, responsive selling either up to the prior day's range or missing it by a few ticks and continuing higher, or falling in, testing the point of control, and then chopping and bouncing back up. That's been the MO of the market lately. So that's what I'm expecting today. I'm expecting us to open auction out of range. Short-term traders in control. Chop, chop, chop. We have a number at 8:45, 15 minutes in. Nothing significant. ISM New York. I don't expect that to be a driver. Factory orders might be. We'll see how far they miss by, expecting 10.9% there. But overall, I expect responsive selling into the prior day's range to kind of confirm that and then continue higher. Continue to chop higher. The market's having a hard time making higher highs, but it continues to make higher highs. So there's nothing here that says get short and hold. So here's a 2005 right here, the purple line. Purple line's 2005. The next one up is 2013.50 for a measured move target. So the measured move targets are areas that the market's expected to touch and pause around within a few ticks or so. If I were long, those are areas I'd look to peel something off and manage risk. So I just gave you the primary expectation. I want you to look at the structure again that we left behind for August. August is over. Newsflash. And the structure we've left behind is considerably weak. There was essentially for the month of August, there was no real consensus on value. If you look at the value area in a market profile mode, which uses time, which I'm not a fan of, used to be. I used to compute these market profiles in my head, actually, and preempt the point of control shifts before they happen. That was an important aspect of my trading. But look at this value area. The value area goes from 1971 or so. Let's see, the value area. The value area goes from 71.25 to 1899.75 to the low. That's the value area of August. That's insane. That's a lot of value. So there was no real value found in August. So to me, this structure seems very, very weak. If the market decides to turn over and tests areas below, it has a long way to go. It has all the way down into the 1928 to 1916 area to go, with very little to hold it back. If you merge these profiles together, you get something from July, but July had built, an entire month in about a 45-point range. July built a lot of fuel for August's trade, but August's structure is very gappy, very weak auctions throughout. This is a one-day HVN right at the July point of control. There's just not enough there to show that the auction tested, thoroughly tested, and continue higher and higher and higher and higher, and kept building value higher. The market has moved away from August value, but August value is not real. It's a trending month. So the value area for August is not real. And to me, this creates a structure whereby if it's retested, it's kind of like building a mansion on stilts that are too thin or too weak. It'll stand as long as the ground underneath it doesn't budge, but as soon as the ground shifts or there's a tremor, the whole thing is at risk of crumbling down very, very easily, and that's what we have underneath us. I'm not saying that I'm a bear. I don't hold a bias on the market, but I'm just saying that you need to observe that we did not have good structure in August. You can basically say that the auction was driven by a higher time frame consistently without rechecking the auction, without verifying that auction. It's almost like a sovereign. It's almost like a sovereign buyer comes in and buys up the market without regard to price, and we're trading price and volume. Okay. So that's that. Not much else to cover other than the fact that you do have some headline risk with the Ukraine still. It's been like that for weeks now. Who knows what will be said going forward, but we do have that risk. And then of course, you know, just the volume's very light, and the ranges are compressed. So, you know, we had a range expansion yesterday and a little more volume expansion yesterday, but that's only because we sold off. If we continue higher, and we are continuing higher, then expect volumes to drop and for the range to compress again, which means that it's another test of your patience. This is the type of trading that requires really strong patience. If you're able to pull that through in this environment, I believe that when things loosen up, when the volatility comes back, you'll be much more confident, much more in control of your trading. That's been my experience. So this is a good time to just, you know, pick your spots. Do not get stubborn with the market. Don't take a position and add to it and add to it and add to it because you think it can't go very far, because it can. So caution on that. I see a lot of people building short positions and pushing out, building short positions and pushing out, even though value as you see it is continuing higher and higher and higher. If you look at my value chart, if you follow these red points of control, there is nothing here that says that the market is unable to sustain higher prices. Not only is it moving higher in price, it is moving higher in value. It is building value higher and higher and higher, as you see here. Now we have this composite HVN that's building up here, and it's showing that the market is building value there, that the participants are finding it appropriate to trade here. Otherwise you wouldn't have this volume. So being in this environment is going to cost you a lot of money. Just trade the facts. Don't trade how you feel. How you feel is irrelevant to the market. Trade the facts. Look at what's there. Be almost like a detective. Look at what's there and just base your bias and your context read and your trading decisions on what is there, rather than how you feel about the economy or how you feel about the market, and expressing your frustration. Don't trade from your emotions. Your emotions have their place. They're not to be ignored. They can't be ignored. They're a part of you, but don't trade out of emotions. Be objective. Be as objective as possible. That is your life's work as a trader, is to cut out the noise and stay focused on what the story is. You're responding to the story. You're like a journalist. You're following the truth rather than coming up with your own ideas and pushing your own story on the market. Okay? Good luck today, and as always, watch your risk. Take care.